What do you make of the rally we've seen? How much of this is driven by fundamentals as earnings have also been crossing in recent weeks?
Well, thank you very much. Good morning. Look, I think it's about the market really pricing in a Fed pivot sometime at the end of this year or beginning of next year, which we do not agree with. I think that there's still a lot of persistence in inflation, in rents, wages, education. Labor market is still very tight, and the employment cost index, which is an index that we monitor very closely to understand whether we are close to peak inflation, hence peak rates, it still is not showing any signs of cooling down. So we do not agree with the market pricing at the moment.
So Lale, if you don't agree with the market pricing, what sort of strategy do you adopt at this stage to try and capture any downside?
Sure. Look, we are market neutral in terms of having more defensive strategies in place. We do believe that, income generating assets, short duration assets, i.e. equity income assets, are going to perform very well in the next few months. I think overall on a sectoral basis, it's again those sectors that are going to be able to translate those higher input cost prices to their consumers, such as healthcare. Or again, energy does lead the earnings seasons. As we know, it's still, it has the war prices helping them, war helping the prices elevated in the next few days, in the next few months. So that is going to continue. And of course, we have materials as well as a sector that we favor.
Lale, just on that utilities call in the energy sector, I'm intrigued by that because the extractive businesses in the energy story have done incredibly well. We know BP and Shell and the others are doing phenomenally well here. But a lot of the utilities have been stuck in the middle of this price squeeze because they've got long-term contracts with their customers, but short-term contracts with their suppliers. So businesses like Uniper, for example, in Germany, we've seen having to be bailed out ultimately because they are losing money very quickly. How careful do you need to be about the utility that you buy here then? Because it seems to me many of them are actually in the eye of the storm.
Yeah, I mean, especially here in Europe, as you said, Germany, Italy, France, they're going to come under pressure in the next few months. I would say until, let's say, mid-2023. I'm mostly talking about the US in terms of my sectoral, preference for utilities. So I would urge investors to, again, take into account, which sectors, but in which country to take a position in, because as we are seeing at the moment, Europe is really at the eye of the storm in terms of this energy crisis versus in the US. We have, the US is being self-sufficient in food and energy. So I think from a sectoral basis, again, utilities is going to be much better there in terms of performance.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.